people like that get some remarkable results, and sometimes they get some quick failure. And I haven't the faintest idea how Elon Musk is going to turn out, but I think he's got a considerable chance of failure.
In the automotive sector, GM and Tesla have had a long-running competition. Today, to add a little spice to the event, Charlie Munger offers his thoughts on GM and Tesla, and we'll discover which one is preferable to the other. Make sure to stay tuned till the very end to find out. The famed financier and Warren Buffett's business partner, Charlie Munger, was one among the critics of Tesla's objectives. Elon Musk can afford to look down on his critics and naysayers because Tesla's market capitalization is around $1 trillion. It's an exercise to which the world's richest man, who drove the entire automobile industry to shift to electric vehicles, readily lends his support. When asked about Tesla, Charlie Munger replied, "I would never purchase it and I would never sell it short." Basically, Munger isn't crazy for saying such things, and there's a reason he wouldn't invest in Tesla. Let's compare GM with Tesla to get a sense of what the big picture is and see which one is better. Given how the market evaluates Tesla and General Motors now, it's difficult to compare the two firms. In 2020, Tesla would have delivered 499,550 vehicles worldwide, but GM will have delivered 2.5 million vehicles in the United States and 2.6 million in China, two of its most important markets. GM is currently a considerably larger car stock in terms of operations, but it's also far less valued. Is Tesla overvalued? Is GM undervalued? Or will Tesla continue to outperform its main competitor? Let's take a look at where these two companies are going. Tesla is adored by the market today since it is the undisputed leader in the field of electric automobiles. No company can match its capability, and the rise of electric vehicles has piqued the market's interest. GM, on the other hand, is attempting to catch up to Tesla with a planned $27 billion investment in electric and driverless vehicles through 2025, and its forthcoming Ultium-powered vehicles might have 450-mile ranges, catching up to Tesla's industry-leading range. GM plans to release 30 distinct electric vehicles over the next 5 years, including the GMC Hummer EV, a Bolt EUV, and a Cadillac Lyriq. We should expect GM to overtake Tesla in EVs in 5 years, but simply supplying compelling cars, trucks, and SUVs would be a significant shift in the industry and may eat into Tesla's sales and profits. GM and other automakers will require less regulatory credits as their EV output grows. This will put a strain on Tesla's finances. We mention this because we know GM is profitable, but we don't yet know if Tesla can run a profitable business in the long run. And investors are paying a high premium for a manufacturer that is yet to turn a profit. The biggest significant difference between Tesla and GM is in their autonomous driving strategies. Tesla is selling self-driving technology to car owners, with the self-driving features now available for $10,000. Tesla clearly sees autonomous driving as software that it can sell to car owners at a huge profit margin, and the stock market values the company as if those sales will increase quickly. GM is working on autonomous features for its vehicles, but autonomous ride-sharing may be the way of the future. GM's largest autonomous investment is in the Cruise, an autonomous ride-sharing firm that has 5 fully driverless vehicles operating in the San Francisco area. Cruise's goal is to eliminate vehicle ownership altogether, not just add autonomy to people's cars. Your perspective on autonomy in relation to Tesla and GM boils down to your vision of the future of transportation. If you think millions of electric vehicles with self-driving technologies will be in garages all around the world in a decade, Tesla will win. If you believe that autonomous vehicles will make ride-sharing more affordable and accessible, then Cruise and GM will be the big winners. Also, Honda and GM are expanding their electric vehicle collaboration to include sub-$30,000 EVs that the two companies want to mass produce in the millions. The low-cost electric vehicles will use GM's Ultium platform and battery, but they won't be available until 2027, giving Tesla plenty of time to respond with its projected $25,000 car. Elon Musk recently stated that his company is not working on the long-promised $25,000 Tesla because it has more pressing models in the works, such as the Cybertruck and the Roadster 2. Honda, on the other hand, stated today that it's expanding its electric car relationship with General Motors to produce precisely such cheap EV models based on the Ultium platform and battery technology developed by GM. Previously, Honda's electric vehicle partnership with GM was confined to 2 models, a Honda Prologue and the first electric Acura, both of which were scheduled for a 2004 US introduction in small numbers. The Ultium-based cheap Honda EVs, on the other hand, will be mass-produced in the millions and will include popular categories such as compact crossovers. The new electric Hondas will be priced under $30,000, but they won't be available until 2027, allowing Tesla plenty of time to catch up and produce its own budget EV rival. GM and Honda will share their best technology, design and manufacturing strategies to offer affordable and desirable EVs on the global scale, including our main markets in North America, South America and China, according to Mary Barra, GM's CEO. Toshihiro Mibe, Honda's president, expressed similar optimism, saying that the two companies will build on our successful technology collaboration to assist achieve a rapid rise in sales of electric vehicles. Honda isn't giving up on its aim to develop its own electric car platform, according to Rick Kostek, the American Honda VP of Corporate Operations. Honda has allegedly determined that building on its existing EV cooperation with General Motors will help it stay relevant in the meanwhile, despite being late to the electrification game. When the first electric Acura or the Prologue appear, layering Honda's distinct appearance and interior design over GM's platform, it'll be clear how Honda plans to differentiate its electric vehicles from those of GM. Furthermore, beginning 2020, the competition has become more intense. Both companies are competing against each other. GM is putting everything they have into preparation. If you look at this amazing news, you'll see what we're talking about. GM has announced that it'll open Canada's first full-scale commercial electric vehicle EV manufacturing hub in its Cathie automobile assembly plant in Ingersoll, Ontario, with production beginning by the end of the year. The start of EV production in Cathie is part of a $2 billion investment announced by the Corporation of Ontario, which also includes a proposal to restore vehicle production in its Oshawa assembly facility, which was shut down in 2019. The Ontario and federal governments will each pay $259 million to support GM's initiatives in Ingersoll and Oshawa, as well as to boost research and development in the province. The company's Oshawa factory will be able to produce a light-duty Chevy Silverado pickup as a result of their efforts. Since the plant reopened, this will result in the creation of 2,600 new employment. The investment will allow the Ingersoll plant to serve as the company's EV hub for its new all-electric commercial vehicle brand Bright Drop, as well as serve as Canada's first full-scale EV manufacturing facility. North America will be a springboard for GM's expansion and economic growth thanks to the company's focused efforts. It's worth noting that GM is making a strong push toward electric vehicles. It plans to launch 30 new electric vehicle models in 2025, eliminate tailpipe emissions from new light-duty vehicles by 2035, and achieve carbon neutrality by 2040. The GMC Hummer EV and Cadillac Lyriq crossover EV, among others, are projected to boost top-line growth. Factory Zero, as well as operations in Spring Hill and Cathie, are laying the groundwork for GM's electrification objectives. The Ultium drive technology from General Motors is expected to expand its e-mobility capabilities. Bright Drop, a company that aims to provide an integrated ecosystem of electric first-to-last-mile devices, is expected to succeed. The introduction of Ultium Charge 360, which aims to improve the charging experience, is also encouraging. Aside from the Ultium platform, which is expected to boost GM's electrification capabilities, the Ultifi platform aims to help the company attain software and services leadership. Separately, President Joe Biden praised his administration's economic plan for helping spark a historic American manufacturing resurgence in response to GM's investment announcement on Tuesday. In a statement, Biden said, "From day one, my administration has been laser-focused on ensuring that America leads the manufacturing future of electric automobiles. This announcement is the latest in a series of over $100 billion investment in American car production over the last year to produce electric vehicles and batteries." Biden has been a supporter of electric vehicles and the retention of home manufacturing in their supply chains. In the Bipartisan Infrastructure and Jobs Act, he proposed $7.5 billion for electric vehicle charging stations. He's also pushing for automakers' EVs to account for half of all new car sales in the United States by 2030. One thing that time has taught us is to wait and see what happens. GM appears to be in the game right now and has said officially that it will take over Tesla by 2025. Let us know your views on which is better, GM or Tesla, in the comment section. That wraps today's video. Thanks for watching. If you enjoyed it, please like, share, and subscribe to our channel for more exciting videos like this one. See you in the next video.